Hey, good morning. Good morning. Waiting on gold to start moving up. Hopefully, you can start re-breaking some highs here by 34.90. But hey, we hit the all-time highs. Look at this. We're above 3,500. You know, so I think just as we spoke about yesterday, that Tuesday was most likely going to be hitting those all-time highs. Looks like yesterday's candlestick just kind of, yeah, it didn't have juice in it. It didn't have juice in it. Might have been that that New York bank holiday, that US bank holiday. So once again, we've seen the Asia session's been performing quite nicely. Maybe people are trying to get buys into Asia now because price is moving up. We're expecting price to move up, so we're getting in these Asia session pushes. This push here as yesterday, this today. I actually came onto the chart, took a buy here because we were up like 0.55%. And we had just tapped the all-time highs. Man, there was so much bullish exuberance, you know, leading up into the pre-London time. So now I'm just looking at this as a small little retracement over here for potential continuation. Yeah, potential continuation soon. But we need to get above resistance. We need to break above, at least here for now. Let me look at that daily. Yeah, I would say just about that resistance should be good. I was trying to buy from the bottom, but missed my entry by for 3 pips. This is a massive. I just think this is a big retracement. It actually retraced quite decent. It did not do any fake outs, unlike yesterday where we broke that support level, and then we saw price kind of like fake back into that zone. So yeah, so right now we're up 0.32%. Looks like we corrected some of this move. Let's see how much of this move has been corrected. From here to here, just about close to 65%. Close to 65% of that range has already been filled up. Maybe swing entry model. Swing entry model, these highs. Hey, Vicar, good morning. I like the buys above 34.90.35. 34.90. Yeah, I'm thinking swing entry model, or we can swing it. We can swing it, or maybe we can wait for a 1 minute time frame play. I just feel like actually just buying now, to be honest, guys. Like, honestly, I think if I bought here even with that same swing entry stop loss, price would most likely still play out because of the bullish exuberance. You know, that's a problem that I've been seeing with London session, is like if you don't get stuck in these early trades, it's always giving it later, and then it's like, ooh, it flops, and then it's like, oh wow, now pre-NY is gonna be the time that it moves. Like this London sessions, man, it's just like the volume is missing. It's missing the session. It's either coming Asia or it's coming pre-NY. So it's quite an interesting situation here. Should I wait? Should I just take it now? Maybe I should just take it now. Take it now at the break of the highs. I see there's already an accumulation that's in play right now. This, what's that, 50.6? 50.6 stop. Problem is, I'm not even ready to take it. See what's going on here. 0.98. Stop below that low. Should I wait? Should I wait? Should I wait? That looks good for me, but just for me to take it on the 1 minute console. 1 minute console. Maybe if we re-break these highs. Then stop loss below that structure over there. It's filling up a range. That's a problem. We're already inside a range. Like this is already filling up some kind of a range. But I would be expecting it to keep moving up though. You got a liquidity grab situation that's happening here on the 15 minute. Break below these lows. And I'll basically at this point just base the trade off of 15 minute. I'll base the trade off of 15 minute and bullish exuberance. Yeah, it's re-breaking. Alright, I just took it here. Let's see, let's see, let's see. Oh, wow. Holy. No way, Goldie. I'm only risking 1% anyway. Gambler Vic? Yeah, there's a small little gamble here. Did not expect that drawdown that quickly. Yeah, let me get out of here. Did not want to see that drawdown that quickly. I look for a re-entry. Thought we just skyrocket upwards. Figured this was already the move down. That was a liquidity grab down over here. That was quite a cool, quick little pullback. I'll just go 0.5 risk on the next one. Normal retracing, it's OB plus FVG zone. Yeah, but that's why I mean, like the follow throughs are just not there. Man, if I did this pre-NY, this thing would have flown up. These are the kind of trades that I usually take during my other sessions. They're more impulsive. You know, I don't really think too much about those trades. I just see like some good opportunity, I take it and we get the volume. But you see, man, with the London, I gotta be extra cautious here. Or like even more aggressive. So I don't even know at this point, man. I don't know at this point. Because we're not getting follow-throughs. Like this session's not following through at all. So I'm just gonna wait and see what happens next. Maybe it's gonna retrace down a little bit more and then give another opportunity. Or just have to wait till the break of those highs again. Why I never get ads on TradingView? Oh yeah, it's because I'm premium. I'm on premium. Normal, let's see. See, there's the wick. It's normal, doesn't mean it comes down. Oh yeah, we just gotta wait here at this point. We're gonna wait here at this point. Because that 15 minute already did the grab over here. And this candle was so bullish. It was so bullish. Now for it to reflip again, that's kind of sketchy anyway. About three minutes for this candle here to close. Are you live every day? Yes, I'm live every day. The thing is, like, I want to try catch a runner, though. I want to try catch a bit of a runner. Because if we're retracing, we hit all-time highs by 3,500. 3,500 actually push all the way up towards, what, 3,508? Let's see. I think London's still picking its direction since we just got the London Open here now. We got resistance by 34.88, support by 34.83. Because the next entry I see is it's gonna be above here. That would just be on that'll be on a swing entry. Basically like a swing entry, that price can move up here. Like that. It's got about like a 67 pip range. It could be a situation, maybe if we don't get above that zone, that price may get stuck here for a bit. I was kind of anticipating this consolidation would continue playing through because this was already at like some kind of a break. Some kind of a break here. It's not the prettiest consolidation, but it's more in line with also the time. I was trying to time that with the London Open. Because most of my trades, because they're all like impulsive trades, they're all timed with time. So the closer I can get my trades to the same times that I'm taking my trades, you know, the better. I kind of expect it to always behave the same way. But yeah, I think for this session here, we gotta wait. We probably gotta have to wait towards like 34.88 at least for some kind of direction, because this might end up becoming like a no trade zone. GJ is bleeding. Oh, wow. What happened on GJ? Sheesh. But it finally got above 200. Looks like also GJ hit psychological marks today. Oh, nice. GJ above 200. Gold hit 3,500. Look at that. Awesome. Consolidation, got your left shoulder, head, right shoulder, volume coming in here. Alright guys, we'll journal that trade later. I just kind of want to focus on trading for a bit. We'll journal that trade later. What is that? 238? That's about 0.47. Yeah, I'll just go half risk on the next one. The XY push heavy past minutes. Wait, this daily does have a bottom wick though, right? Yeah, it does. Because I think what's gonna happen is what's gonna happen is if price breaks above this resistance by 34.90, then we can maybe try and attempt to go up here again. Like price can break and try to come up here again around these areas. But it's a pretty nice zone there. It's about 65 pips. Really nice zone. So this is gonna look like some kind of a big accumulation like this, and then break the highs. I think this would be where the volume starts to build up and then distribute to the upside. GBP USD. Dollar flying. Yeah, but this was a lovely distribution here on GJ. I guess because this is a point in the market where price has rejected before, you know, many times. So looking left, you can see there's a higher probability that price can reject this zone again. And then we also had that structure that was formed now in the lower time frame, and then, you know, entry confirmation of the break of the lows for price to move down. It was news JPY moved that price down. Yeah, it's beautiful timing, huh? Right above that, right above here. So, you know, sometimes they say technicals are ahead of fundamentals. So that would be perfect timing over here. Right above psychological market 200. But what news was this? This must have been some kind of unscheduled news event. But nothing, no latest updates on TradingView. Last one here was 2 days ago. Maybe you're gonna see something on live news feed here on Discord. So we got a Bank of Japan, Himino support mulling of hike if tariff makes little impact. Yeah, we got this news come out here at 1:30. Was it 1:35? Let's see. Or yeah, 1:35. Oh, that was before though, before the dump. 1:35. Let's see what this is. Appropriate to keep raising rates in line with economic price trends. Yep, this was 5 hours ago. So sometimes it does take time. Sometimes it does take time to assimilate into the market. So that's probably what happened here. Let's see, raising rates in line with economic price trends. Japan's economy and monetary policy speech at a meeting with local leaders in eastern Hokkaido. Not true, Japan agreed to cut tariffs on US farm products. Yeah, have you seen this thing going around about Trump being killed or something? I haven't really dug into it much. But, not killed, but people like got these conspiracy that Trump died or something. There's apparently this hashtag that was trending. Hashtag, I think Trump dead. Top trending hashtags. Then there's this guy at one of his golf courses who was like apparently a body double of Trump. Apparently he's really sick or something. Because there's a reason behind this massive dump. There's always a reason. Always a reason to such a thing like this happening. So we did have news come out earlier on. And the thing is, we're also at a very key level. You know, this 200 mark is a very key level. Just like the reason why gold is dumping right now. The reason why gold is dumping right now is also because it's at a key level. It's here at 3,500. You know, it's at 3,500. So we tend to see this sometimes happen on gold is whenever it breaks like a new high, it retraces. Correct? So every time it gets new higher high, retrace, higher high, retraces. So that's something we've seen a lot happen on gold. Because people try always to get in on the yeah, I think this is coming down to like completely take out the Asia session players. But this is getting in. Most of the time people want to continue the trend, so it usually comes down like this. You see, like right now we're down 0.16%. So it's gone from 0.55. It's gone from the highs of, let's see how much, 0.94% already today. Holy, we almost had 1%, and now we're down to 0.17%. So that's why I think it is. I think for the most part, it's like these earlier sessions are more of like the pushes, like we already expect them to be. And then London is somewhat of a correction consolidation. Then pre-NY is Again, it just has a little bit more gas in pre-NY to change the pre-NY NY open to get a little bit more direction in again. But I'm not sure about the New York session of too much, because I normally end my trading by before the NY session opens. I'm already well off the charts. So my muscle memory is just mainly from pre-London up towards pre-New York. I'm not sure how good the New York sessions are, but we can look at them here. Let's see what New York did yesterday. Oh, New York consolidated. It kind of consolidated a lot. And then Friday, New York had a beautiful run. Decent swings. I see some really lovely swing entry models here on Thursday. Very nice sells with a fake out confluence. What else happened? Another fake out confluence sell, clean range again on Wednesday. Oh wow, another sell. Another sell on Tuesday. Oh, Lee, man, the New York session actually been pretty clean. What's this? Monday? It's kind of tight. That range here was kind of tight. We could have cut the buys. Really nice one for the buys. Looks the same as the sells were looking. Beautiful. Okay. Maybe we should start trading the New York session. But man, the problem with that, it's not in line with my lifestyle, you know. So, you know, trading should always be in line with your lifestyle and not the other way around. You shouldn't chase the market. You should just trade the time that you can trade and then just see how you can make it work. How can I start trusting my system again? Why losing faith in your system in the first place? I would say you're just in the stage of refining that system, so just keep refining it and keep working on it. You know, don't be too afraid to go back to the drawing board if you need to, and like kind of tweak a little bit of things, whether that's the time that you're trading, the amount that you're trading, the risk that you're using. You know, maybe the good way to trust your system again is to reduce your risk. Reduce your risk, you know, and then you can start taking your trades again without thinking too much about them. Oh yeah, that's true. It was a public holiday yesterday. That's why we had consolidation. And it fizzled out really badly towards the end. Look at this. Basically nothing. Really tight range. Is that like 10 pips, 12 pips? Do. Fly, fly, fly. But what is it taking out? On the 15-minute, it hasn't taken out any structure, really. Oh, it looks like it tapped into the 8 SMA there. On the 30. Hey, Kraken, good morning. Yeah, this looks like that's basically what it did. It just tapped into some kind of 30 SMA. Man. When can we get some of this bullish exuberance? When can we get some of this from the Asia session? These are so nice to trade. Again, this is happening so early, I'm not even on the charts. But these are those times where you just hit buy, basically. Like, what I was trying to do here was what I was expecting maybe could happen here. You know, you're just gonna hit buy and then price moves up. It's gonna hit buy and then price moves up. When did it start moving? That's 2130. And this one's at 2100 hours. 2100. You see how like important timing is? Like if that's when the volume is coming in, there's a higher chance that you're gonna get the volume at that same time. I mean, the strategy is important. It's really important, the strategy. But you gotta see just also at the same time what the market does during those hours. Mm-mm. Mm-mm. Oh, this was a brutal range. Because this range tried to break out multiple times, but the only real breakout came in a couple hours into New York. Yeah, that's why it's not good to overtrade. That's why it's not good to overtrade. Because you can take one buy here, it fails. You can try one buy here, then it fails again. And then, you know, like hopefully that you don't overtrade in the range. But man, if a breakout fails twice like this, that kind of sucks. Because for most people, 2 losses in a day could like call it a day, you know? For most people who are trying to really limit the amount of trades that they're taking. So you can miss out on that, finally that third breakout. Or you get the third breakout, but man, that third breakout is such an emotional breakout. Because it's like, damn, I've invested so much in this breakout. I really need this one to work. I need this one to actually break out. So it becomes like an emotional trade at that point. Bro, close for the day, please. 2 trades is enough for the day. Yeah, 2 trades is enough for the day. 2 trades can be enough for the day. Man, Asia becoming the easiest session to trade compared to London, New York nowadays. That's true. I feel like this year has been quite an interesting year. Like, these sessions have been really nice. Like the Asia has been really nice this year. Asia sessions have been really nice. Let's see. Backdrop for gold remains favorable. Julius Baer says. Baer. Expectations for lower US interest rates and weaker dollar have lured investors back into gold and silver, pushing prices higher with concerns about the Fed's independence providing additional arguments to buy. See, after Trump moved to fire Fed governor last week, gold rose and silver traded above $40 an ounce for the first time in 14 years. Gold hit a record overnight, topping $3,500 per ounce. The backdrop for gold remains favorable, shaped by sound investment demand, strong central bank buying, and US dollar weakness. It reiterates a constructive view on gold and remains neutral on silver due to less compelling risk/rewards relationship. Let's see. Gold's share in global reserves hit 30-year high amid weakening dollar. Gold's dominance, okay, strengthened. There's this new feature, by the way, that came out on TradingView. I don't know if I can pull it up again, but I saw it when I was trading earlier. I just don't know how it even came onto the chart. Maybe this is where it is. Yeah, look at this, macro maps. This is pretty cool. So we can check interest rates here. United States currently at 4.5%. And you can check other countries. You can check Russia, 18%. We got China at 0%. Oh, wait, 3%. Yeah, we got China at 3%. That's pretty nice. Unemployment rates. Let's look at America. 4.2%. Let's look at Russia. 2.2%. 5.2%. I don't know. I think this is pretty interesting. I don't think I'm actually going to use this, but it's kind of nice to see TradingView have some more macro geared news. Can we actually search something? Oh, health, money. What else can we do here? Gold reserves. You can take a picture too. Could be a nice PowerPoint presentation, this is. You got the data down over here and you can just explain the countries. All right, let's see what Goldie does today. Oh, London. Man, Asia's awesome. Good morning, Jay. NY session, always lots of news. That's true. Always 1 hour, 30 minutes into New York session, we getting some kind of news. So you just gotta maneuver. You gotta maneuver on those fundamentals. That's a thing. That's the only thing. Is because what happens is you're gonna have your setup at the same time news is happening, so you don't know whether to stop trading 20 minutes, 30 minutes before the news, because you know at that point it can mess up the technical analysis. It becomes more news driven, so you do have a lot more to think about when taking your positions. So my rule of thumb was always like around 30 minutes before the news, I would not execute any more trades. 30 minutes before the news. But of course, if it's like a lower time frame play on the 1 minute, usually 1 minute plays can be done in like about 15 minutes or so, then I guess you could get away with something. But the closer you come towards that red folder, the more chances your trade gets messed up. It's kind of unfortunate because it's like a psychological thing, because you know sometimes when you take the trade, it can actually even play out in your favor. You know, and then that would been the trade that you needed to take, and then the news can even help your gains more. You know, because if you're already stuck in and price moves in your direction, then you can just like hold partial, and then it just pushes with the red folder. And if it's like still in your entries and it's still too close to your entries, you know, you can always just close it off before the volume comes in. Oh, but we got Trump speaking today as well. He's gonna be speaking much later on though. Up like Donald Trump. Trump has answered the death rumors. He said, "I've never felt better." Yeah, I really want to see what that was about. Why did people think that he died? Is it because of the stunt double? Probably. Apparently, there's a stunt double that was playing golf that looked like Trump. Donald Trump reacts to... Man, this became like a big thing. Wait, let's see what this is.
President Donald Trump's health once again, which gripped the nation.
Donald Trump
The president is dismissing the chatter, and he's doing
says never felt better amid... Damn, that thing's moving too quickly.
He has, in his words, never felt better in his life. His post came in response to a conservative commentator who accused the media of holding what he called comical double standards. Pointed out that Joe Biden could...
Oh, this looks like something that YouTube is gonna give me a warning for. It's gonna say, "Don't say Trump is dead." That's the video you watched? I honestly want to take a buy here as it breaks these highs. Looks like a nice little console breakout. Let's see how that looks coming up. I'll put like 43 pips. Want to see if we can get like a little fake out over here. Maybe try catch like a runner. So I'm trying to catch the inception. I still believe that like there's definitely still bullish exuberance. You know, there's definitely still bullish exuberance in this instrument. What we're seeing now are just like some kind of retracements. But these kinds of moves just don't happen on accident. You know, this is definitely not moves that happen on accident. So you can catch one of these what do you call it? One of these distributions. I think it could be really good. I haven't yet caught one myself because they've been happening too early. So I'd love to catch one with you guys here on stream. I have not been able to catch a runner. Oh, because nothing's been looking too appetizing to catch a runner. But you know, something like this, after such a retracement downwards, we're back down towards these Asia lows where the move initially happened. So it'd be kind of like a similar situation where you got clean range such as this on the left hand side. You got clean range right here as well. It's kind of bottoming out. We just need to break the highs to confirm the momentum. We're definitely not trending right now. The daily is down 0.20%, but you know, that's also kind of the point. What if the daily flip? Oh yeah, if the daily flip, then you would need to push down about 55 more pips, 56 more pips, something like that. So if the daily flips, then you know it is what it is at that point. The daily flips. It's losing, the daily is still losing a bit of steam over there. Never caught one ever. That would be amazing. Oh, I think like if you focus on taking, let's say, 2 trades a day, what you can do is every day give yourself one opportunity to catch a running trade. And you wanna get those trades where you have like very clean ranges on the left hand side. So you know, this is something that we talk about a lot during our simulation sessions, is how to catch those types of moves with just using structure. But right now what I'm anticipating is, sure, we do have a bit of structure, but price will really need to break above 34.88 over here. It's kind of like tricky because there's this area here that can give price a bit of trouble. You see, this is like an area where it rejected. So such a structure like this, typically this is not the best case scenario for a type of a bomboclat trade. Bomboclat! You know, but what we're considering is just a macro volume for this. But with just the technicals, typically this is just a bit sketchy. So hopefully if I get triggered in over here and price can just keep pushing up beyond 34.88, you know, that's going to give us that leg room we need to see price move up towards like 34.96. Can I make an entry now? No, I don't think you should even be trading at this point. I don't think you should even be trading. Because, you know, like when you don't know what's going on here, then you gotta really question whether you should risk any money on that. You know, I think the best thing is just to watch and learn and try and understand the position. You should never take a trade if you don't understand the position. You know, you should never take a trade. All right, price is coming in. Rebreaks of these highs, expecting just pure volume-based entry. Because I see it broke below support. And we have a consolidation reversal in there too. All right, so I got stuck in here. We got a potential reversal confirmation here. Because on the lower time frame, it's accumulating. And we just broke below a support level. This is something that I typically like to see when support levels get broken and then price accumulates such as this. Expecting it to continue to move up bullish. And that's it. That's going to be... Yeah, that's going to be my attempt at catching a big move for gold today here. Because we've already had the retracement down. What's your thoughts on high Kinashi candles? I hear much smoother to trade. High Kinashi? Yeah, I think this is, let's see over here what these are. I don't see the point in using high Kinashi candles unless it's like maybe it's a strategy thing, because you know when you just use the normal candlesticks, this is like enough. It's like much more cleaner with the normal candles because you can see the open price and closing price. Like it's a lot more cleaner like this. So I've always just used the candles. I feel like this is just a default setting. When it comes to these other type of candles over here, yeah, I think you just gotta really know what you're doing with them. You know, if you're using them as part of a strategy or something of the sort. See, we got this as what? Renko. We got other things like Kagi. You know, there's a lot of like different ones. So, you know, what's the difference between Kagi and Haikanashi? You know, it's probably has to do with maybe a type of strategy that you're using or something. I'm not exactly sure. But, you know, the candlesticks are more... These are the default settings. Candles and, you know, line graph, I think are pretty nice. Else we got the bars. The bars are like the candles, but without the bodies. So you're just seeing the open and close, open and close. It's actually quite hard to use the bars. Kind of confuses a bit. Yeah, let's see. Can Goldie skyrocket for us or not? How much did it already push there? That's about what, 16 pips? Yeah, today feels a bit of like a gambler day, but I'm still managing my risk anyway. I went in about 0.5%. Yeah, just gotta let that play out now. Damn, still no buys, Goldie. Come on. What is this? Because that setup is still clean. This is a move that I would take over and over again. If I trade, this is a move that I would take over and over again. But I think it's just a timing, man. London's just still doing its retracements. Maybe in that case, it's just gonna keep pushing down until pre-NY. It really wants to probably take out all of these other Asia players over here. But I figured that should have been enough because of the wick. The way the wick came in there. Bull candle in London can't be trusted. Yeah, exactly. Okay, that's it. That's it. No buys this London session. We're probably gonna see these buys happen later on, if anything. Still up for the day. About 0.55%. Yeah. All right, let's journal this. 238. Let's do 0.47. So 1 minute. First entry was not even a consolidation. I don't know what we're going to label this as, because that was just a random trade that I took. Maybe just gonna leave it blank. All right, let's call this gold. At 3:08 a.m. And then this is 250. 0.50. Well, I guess it's a nice way to explain and to show why over trading is always a bad idea. In terms of whenever I say you can have more clusters of losing trades if you overtrade. So if you're trying to get a spreadsheet which looks a bit more like spread out like this, where you're going to have more wins and losses more spread out, much nicer like this and more managed, then there's a reason why you don't take 2 trades back to back in a session. So this is something that usually happens to me quite often. Whenever I take 2 back to back trades, it's usually both losing trades. in just one time frame like this, like very close to each other like that. That's why it's important to always like manage your risk. So you see in total, this is just pretty good managed risk. Still up for the day, 0.50%. So I don't know, we're probably gonna, maybe if I get another setup during pre-NY, then I'm gonna take it. I'm probably gonna avoid trading the London session, very disciplined, because the disciplined approach to trading London is not working because there's no volume. So the only way we can be trading London is just more aggressive entries as of now. So basically, if we see like a confirmation on the 1 minute, like just getting in and taking those more impulsive trades without the trends. Seems to be the case, because even when it trends, it's not even a trending time. Usually even when it's trending, when it's up 0.40%, something like that, it seems to always just be retracing or just consolidating throughout into pre-New York NY Open. But crazy, the daily actually flipped over here. Holy! Right after creating all-time highs. Is it really coming down to take out the Asia lows? Damn, this candle here is like down 70 pips. Sheesh. 70 pips. Yeah, because this was a really good move. It probably didn't mitigate this area yet. If you get two trades at the same time and you took one and it goes to your sell, but the other one is playing out, how do you manage this? How do you take two trades at the same time and then one goes to SL but the other one is playing out? How does that happen? Did you take like a buy and a sell? Because I would imagine if you take a trade both at the same time, they would have the same stop loss. Oh, unless it's a different pair. Took one and goes to SL and that one's... Oh, okay, unless one is a different pair. I guess that makes sense. Maybe you take one on gold and then one on GJ. Yeah, exactly. Okay. So how would you manage it? The other one is playing out. How do you manage this? I mean, you'd manage it just the way you expected to manage it before getting into the trade. Because like before you get into the trade, you should already know how you're going to manage it. You know, whether you're going to take off profits at a 1-to-1 or a 1-to-2. And if one loses, it doesn't mean now you should necessarily change your plan unless that was part of the plan. You know, for example, maybe if one was a 1-to-1 and then one lost, then maybe for that other one that's playing out, then maybe you have it as part of your rules to hold it for a 1-to-2 to compensate for the one that lost. But you know, that depends on you. That depends on you, because I don't trade like this. You know, I don't trade like that. Man, I used to take two trades like on different separate pairs, but managing is always an issue. You know, first of all, if you do that, you also don't want to have a pair with the same currency. Like for example, if it's dollar, you don't want to be trading gold and Gbpjpy USD. You know, because if something's affecting the dollar and dollar strength increases, then both of your trades can become losing trades. So there are also small things like that to keep in mind. So you could do like gold versus something like GBP AUD. You know, then it's like much more easier to manage like that, because these are two different kind of environments now you're looking at. One's affected by the dollar, the other one's affected by the pound. But I don't trade like that, so I have very limited knowledge on that. I just trade basically one instrument and one trade. That's it. I also used to have like separate screens like this and would do analysis on two different pairs. But what that actually creates is also a lot of like analysis, kind of like analysis paralysis, because you're focusing on two different moving pairs. So what happens? You end up missing you can end up missing a move. And it becomes much harder to manage, so you're going back and forth like that. And there, like, in reality, all you need is really just like one good pair. One good pair and maybe one backup pair. Will gold redo the things after create ATH? It drops to 33.66 last time around. Or this time it only took out Asia lows to create another ATH. You know what it could be doing? Actually, I don't want to even think about it. I think it's too much speculating. It just I would say like right now there's a lot of speculation that can be done of what gold is doing. We could assume that it's reflipping to come down, or it's reflipping to create nice price action for buys later. You just want to reduce the amount of speculation. I don't think it like really adds any value to the trading session right now. But for what we can at least see is that it's come down and it's taken out the Asia lows, and it's really given back a lot of its gains on the day. So it's probably just rebalancing itself out. It's back at literally 0%. Back at 0%. Got out on the 30-minute resistance. How'd you get out? Did you get out break even? Oh yeah, we had small 30-minute resistance there. Possibly after rate cuts. You know, it's like it's moving up, correct? Price is moving up right now. But the thing is, like, we also don't have the official rate cuts in yet. So all of this is kind of like expectation that we definitely are getting the rate cuts. That's what the market is telling us. That it truly believes that the rate cuts are going to come in. But there's that little tinge of uncertainty because we haven't really gotten it yet. So maybe these gains are like short-lived gains by all-time highs. Because, you know, we only have about 15 more days or so. Let's see. Yeah, we got about like, what, 15 more days until the next FOMC. So it's probably going to want to have a pricing in, like a retracement before that happens. So it can like properly move above like 3,500. So that's what I think I would expect from gold. But, you know, in terms of the targets that we've already set for ourselves, like those have already been hit. Like, so we've just been, for me personally, my goal has always been 3,500 since, you know, price has been moving up over here. And, you know, eventually targets have been met. Now we don't know what happens above or within this range here of 3,500 because there's no more structure on the left hand side. You know, there's nothing left over there. We've just created a new target over here, which is by 3,508. But yeah, for now, the market needs to move up. If it moves up, it can create more structure for us. It becomes a bit more clear. So that's why I think there's a higher chance maybe we'll retrace up until FOMC and then start moving up again. So we'll wait and see. A lot of it is just waiting, you know. You gotta spend a lot of time and analysis by not always looking for a reason to execute and speculate on the market. GU is melting on 5 minute, just as you mentioned it. Let's see here. Trades taken. Sweep liquidity. A new hour. 30 minute. This is what? GJ. Oh, nice. GJ sells. GJ sells. First trade. Sell on pound dollar. The idea was price create a break with structure to the downside. Entry after price retrace into the red box. SL above the supply zone. Oh, this was GU. GU sells. Nice little accumulation over here too. Dude. Boom, boom, boom. Broke below it. Very clean. Yeah, I think that was awesome. TP around 1 to 6 RR, close 90% SL to BE. Trail SL here 1 to 4 RR. Oh, nice. Yeah, you see, it's like when you're holding, when you're planning on holding, it's more to do also with being on the right side of the market. Sure, you got your entry confirmations. But you're more so on the right side of the market. So if you look at a situation like gold right now, if you took a sell anywhere, okay, you got a sell confirmation, but you're more so on the right side of the market. Because price looks like in this scenario was just gonna move down. So if we took a sell anywhere, you know, you could have had a pretty good trade. So that's how you can basically think about running positions. So whenever you're thinking of running trades, that's basically what's happening. You're just on the right side because the market eventually, you know, it has to move somewhere. 90% of the time it's consolidating, but then the other portions of the time it's moving somewhere. Understand? So like to get like a bomber cloud like this, you're probably coming in like pre-London session time, or if to get a buy, you probably have been needed to be on the charts by the Asia session time. But majority of the rest of the time it's like consolidating, because these are the actual moves. These two. So looks like Asia was a buy, and looks like today's trades were sells from the pre-London. Very simplified but powerful way of looking at markets. Then you also start to understand why the timing aspect is quite important to your potential hit rates. We also have news for the dollar this evening. Let's see. Gold sets record high on rate cut. This was again, that was 20 minutes ago. And we have news this evening. That's true. We have Trump speaking in the afternoon hours. Trump is speaking. And got ISM manufacturing 2 hours into New York session. So plenty of time from now, between now and ISM manufacturing, to catch some trades. Then Trump speaking later. Plenty of time. I guess what people are waiting for now on gold is to see if this thing can bottom out soon. Because the same way as price moved up like this, it can't just keep moving down. It's going to look to correct some of these selling positions over here. Because the market wouldn't typically leave you in profits for that forever, you know. Eventually we'll need to retrace. It could happen soon. It could happen in New York session, but I'm assuming, you know, we got some really nice sells over here. In fact, this was a nice little liquidity grab confluence, sell to the downside. So at least this region over here to get corrected by 34.80. Yeah, because it's a very textbook play. It's a really nice textbook play. I don't know. I think the market already tried to come up there to retest it once, but I don't think it fully retested it. Players would have still survived this. What does Trump will do to the charts? Well, you gotta wait for him to speak. Then we're gonna find out. That's why usually when these people are speaking, when Powell is speaking, like there's a lot of risk off the market. It's only when they start to say things, then you can sort of like, that's when you start to see the reactions on the charts. So we kind of just gotta wait. This could just be even a profit taking if you think about it, because Trump's speaking later on. So you can imagine like people who got into gold buys here, they're securing their profits for the day, trying to take risk off. So we're taking risk off as we're approaching Trump. You know, we have scheduled fundamentals today, so now it's a smart idea to take risk off. So everybody, like these are moving based off of, I would say, more institutional order flows, more of like maybe call it smart money concepts, a little bit of more smart money concepts, because retail traders, we can't really make these moves happen over here. We're just kind of along for the ride, correct? So in that perspective, that's why SMC is also pretty nice. Like, it kind of helps you navigate the markets in a sense when you see stuff like this happen, and you wonder to yourself, like, why is gold moving down after creating all-time highs? You know, why has it lost so much momentum? We should have been moving up. The triangle here, triangle with an eye in the middle. Yeah, but this is probably the reason. You know, this is the reasoning. Risk off makes sense. Always risk off before major events. It's not easy to trade today. Yeah. It's not easy unless you were trading at a very specific time. You know, you're trading at a very specific time. But it's not been easy. Also, my buy this morning, you know, I took a pretty decent buy over here. But it didn't have any follow-through. There was no follow-through above these highs. I wasn't planning on holding it, but I would have at least liked to see a pre-London push. Because usually for that pre-London time, I'm still expecting some moves like this to be playing out. But just like a market cycle, that's also going to shift. So this volume is going to again carry over to this time. You know, so this type of volume here, it's always shifting. So don't chase it. Don't think just because you've been seeing Asia performing well that you're always going to get this in Asia. You know, you're not always going to get that in Asia. But yeah, I think this was really nice buys here. How do I join your mentorship, please? Don't join the mentorship. I just lost 2 trades on stream. Why would you join the mentorship? I just lost 2 trades. Yeah, but you know, I think if you're joining the mentorship, definitely understand the core concepts of how we look at markets. You know, because this situation over here today, this was also like basically a once-off thing. I don't really take back-to-back trades like that. And if I do, I will reduce my risk. I will always reduce my risk whenever you feel that urge of you just want to, you know, try out the market. Always reduce your risk. Don't go too heavy on your risk. So that way, worst case scenario, you can make that back easily. You know, it only take like 1 trade to make it back. The worst case scenario is you don't want to put yourselves in situations where you have to work, you know, 2 times as hard or 3 times as hard to make back that money. It should be like very simple for you. Because it does get harder to make it back. Like if you go on a losing streak, and mainly one because of like, let's say, bad habits, it's kind of unfortunate because let's say you have like a streak like this, 1, 2, 3, 4, 5. It's usually what typically happens is now you're going to start looking at following your rules again. Correct? But it's not as nice because you're just playing catch up at this point. You know, you're just trying to catch up for these losses. Then your psychology takes a big hit because now you naturally want to start holding your trades longer. So usually whenever you see like some kind of bleeding on the account, usually like even 2 or 3 losing trades back to back, you have to really audit your thinking and think about why is the account bleeding? You know, you have to stop it as soon as possible. Like the fastest you can stop it, the better. Because look, in a situation like this, you know what would have happened for more new traders or me in year 1? I would be revenge trading at this point. You know, if I did understand what I was doing, I'll be revenge trading. So what happens is you end up compounding easily. You get a hat trick of losses. You know, and then that really starts to grind your gears. And it makes you stop thinking about the skill. And it makes you start thinking in terms of like, now I need to get lucky to make that back. You know, so I think that one of the best things that ever happened to me was learning how to stop the bleeding. You know, you just gotta put the brakes on. Like as soon as you see like 2 back-to-back losses and there's something that you did that was maybe not part of your rules, you gotta put the brakes on. But if you're following your rules and they're happening at separate times and you know you're really trying to follow your rules, then you know that's fine. Just keep riding it out because you don't know when the next win is gonna come. Because every strategy has a different, you know, cluster of losing trades, which is also normal. Like these were just normal trades that I took, which are just normal losses back to back. And then you got clusters of winning trades, which are also just normal wins. So you got to know the difference between the losing and the wins, the losing and the wins, the losing and the wins. Sorry guys, just give me a moment over here. Got a phone call. I moved my SL to B after gold pushed above 15 pips in that trade, and that saved by 1%. Take it to the limit. Still in sells in GJ since 9 a.m. Oh, nice. Wait, isn't GJ already? Shouldn't it be pulling back up already? Yeah, it should be pulling back up. GJ should be pulling back up. I would say definitely secure something, man. Like having a push like this on GJ is really nice. Like if you caught this move, GJ does not give opportunities like this usually. So you gotta secure something, you know. There's a daily on gold here. It's at 0.03%. Just took out the Asia lows, or rather it just swept out the Asia lows. What's my lot size and leverage? I reduced my leverage recently. I put it back to... I had too much leverage on my account. I actually did not need all that leverage. Leverage on my account is like 1 to 200. Oh, 1 to... I would say 1 to 200 is more than enough for a lot of people. A leverage of 1 to 200 should be sufficient. Lot size wouldn't really help you because, you know, it depends on your account. The lot sizing. But you always want to be risking around 1 to 1.5% ideally. 1 to 1.5% per trade. So you see the lot size changes. Sometimes you're going to have a bigger stop loss, so also the lot size has to adjust. If you got a smaller stop loss, you got to use a bigger bigger lot size. It's risk, you know, risk can be very dynamic. You know, that's the only thing you can control. It's the risk part. Like the take profits can always remain the same if you're planning on securing at a 1-to-1 or, you know, what have you. But you can always be dynamic with the risk. You don't always have to risk the same amount, you know, like if you feel the trade is a really good trade, maybe you can increase the risk. You know, if you feel it's not such a safe trade, then you can reduce the risk, just like how I did over here today. I think the gambler in a lot of people still want to catch these buys, or the gambler in me still wants to catch a buy. But I need to come to terms that these buys, they're not happening now. They're happening either Asia or into New York session. These running trades. Let's see what pre-London's been doing. Yeah, it looks like pre-London also recently hasn't been having any follow-throughs. Yeah, that seems about right. What's my lot size, bro? All right. What if I told you my lot size was a 50 lot? Now, would that help you anyhow? Would your trading become better that you know my lot size is let's say a 50 lot? Doesn't help. I use a 1 to 50, a 1 to 50 leverage. I think all long-term buyer taking profit right now on the HCH. It's if you look daily, it may test fib retracement after several bull candle in the daily. You know, knowing Trump, I feel like Trump is going to say some really good things about the FOMC. He's going to say, oh, you know, the jobs data has been coming out just like we expected. The economy is looking like this. It's getting ready for, it's more than ready for rate cuts. I have a feeling that's what Trump is going to be, what he might say today. He might touch on that for sure. And then price is going to move up here on gold. Let's see, due to speak at the White House. Speaks frequently. Only speeches that might have direct impact are listed on the calendar. So it seems that he will be touching on something, you know, because this event here, especially if this is the last time he's going to be speaking, and then towards the FOMC, could be quite important, quite an important talk over there. 15 days before the FOMC. Because, you know, like from Trump's perspective, he also plays this political game. So I'm sure he's gonna touch on this interest rate thing. Because if you can bring down the interest rates, then you know, I think that's gonna look pretty good for him. Pretty good for him as president, bringing down interest rates. Like most people are gonna want the interest rates to be brought down. You know, so it's also like a political game with Trump. Like if you notice the way Trump speaks, he speaks in a very thought out way to make things seem always not as bad as they are. So that's what I'm going to be expecting here from Trump today. And then that should drive in some bullish exuberance in gold. Some people from your Discord send us friend requests using your name and profile pic. Selling indicator and investment. Yeah, those are all fake accounts. That's why we have this imposters channel here where you gotta see, look at how many messages you get. But imagine how many FX Vic Menses can send you a message. You know, if you get a message from, let's say, 5 or 10 different FX Vic Menses and you still fall for it, you definitely shouldn't be trading. You know, you definitely shouldn't even be on the internet at that point. Because you see how many of these channels there are. Like, you're not just going to get one, you're going to get multiple. And that's something that's out of our control. Literally, like, we try and remove them as much as possible, but I think they just kind of sell themselves out by sending so many messages. So in the end, it doesn't really work anyway. If they put that much effort into actually learning a skill or working at a job, that would make more money than trying to do that. Rather, do you think I can go for long from 3504 or should I go for long higher? You gotta send a chart in, I think is the best thing you're gonna do. Send a chart with the idea for the trade that you want to take. Because if I'm thinking about even longing now, I still think it's a risky long because, you know, price has still been coming down. And there's an option here of about 55 pips. But market is kind of, it's a little bit unpredictable here at this point because it's just still moving down. The daily is basically at a doji. So, you know, any longs here, it would be quite risky because look at the way the daily is moving. There's no volume. Very little volume there. I was speaking to one of them a week ago. They 100% copy and paste their messages. They also don't watch the stream. If they message you guys, your task is to ask them questions they aren't ready for. Exactly. Make them work. And then when you're bored, block them. It's quite a sinister plan, but I like that plan. Waste their time. It's always fun, you know, if you're bored, just waste their time. I think someone did that already once here. Wait, where is it? Oh my days. This is like perfect Drake meme for this. Let's see if there's any ones. These are the easy lemmings to catch. Just use the name, exactly the name like this. Then you're gonna come here and then you're gonna go and ban. Oh, it doesn't give us the Thor hammer. Why did Discord remove the Thor hammer? Boom. We can check again here. Yeah, it looks like this. Looks like that was it. As a good waffler, I'm always looking for a chance to improve my waffle game. Two things you can't predict: what the market will do and what Trump will say. Yep. You know, actually, it's funny that you say that because it's true. You can't really predict in that sense, but you can have probabilities of one thing happening over the other. But predicting, I think just predicting this doesn't sound like a nice word to use. You know, because whenever you get into trading, you always gotta pay real close attention to the words that you're using. So, for example, we've been talking about 3,500 this whole time, right? For when price was all the way down over here. So, would you say that I predicted price to move to 3,500? I don't know. I don't like that word prediction because, you know, it's just like because of the rate cuts, there's a higher probability that we were going to move to 3,500. So we're not predicting, but we're just using logic and reasoning for why price should do one thing over the other thing. You know, so this is also like, there's a fine line as well between that speculation that price would have moved from here to here and using the macro fundamentals to determine where the cash flow is going to be heading towards. You know, so I think it's a fine line. Like, you really have to pay attention to definitely the words that you use. But yeah, I would agree with you. You can't really predict. You can't predict where the market is going to go. That's true. That's true. There's always some kind of a risk for everybody. Like, it doesn't matter if you're a market maker or what have you. There's always some kind of a risk for everybody. What platform do I trade on? I trade on CTrader. The funniest one was GME. You know how GME was so surprised that retail traders were able to push this thing up so much. And then institutions were taking really big hits. But, you know, eventually they win. The institutions eventually win because they move a lot more money. But that was quite crazy over here. This is basically like history. So when you have this like this, it's like history, you know. You can take a picture of this and you're going to put in a history trading book. So this was history. So this was that fight between the gorillas, otherwise known as the retail traders, and the snakes, known as the institutions. And this was, I think, one of the only moments where the gorillas actually made the institutions sweat. You know, this was one, if not the only time that that's actually happened. where institutions took so much more drawdown than they expected because the amount of retail buyers in the market. This is kind of beautiful here. But you see, eventually in the end, it comes down and you get the bailouts. Institutions always get bailouts. Just the way if you learn about our world economy, it's pretty much the same thing. You know, when things really hit the fan, when shit hits the fan, you're always gonna get a bailout. You can always bail ourselves out. Yeah, gold is just hovering here at 0%. What about broker XNES? I think XNES is one of the bigger brokerages. It should be good. It's quite a popular, you know, if it's like a popular brokerage, then most of the time that's the one that you want to be going with. Popular brokerages, popular funding programs, they have less chance of really screwing you over. You know, so you always got to see which are the big companies which have been here for a long time. Those are the safest ones. These other ones, they seem very enticing, but they're not going to last. And usually there's a lot more problems with them, even if they offer like better services. You know, some of them could offer you 1 to 1,000 leverage, 1 to 2,000 leverage, but they're usually unregulated. At a point, you could not press a button anymore. That Robinhood broker did people dirty on GameSpot. Yeah, that's true. Robinhood, that's true. The point, you could not press buy button, only sell. They probably got a really nice offer. They sold out basically. That's what they did. I noticed IC are taking a lot longer to process withdrawals these days. You know, one thing that's good about IC is their customer service. They have really nice customer service. So you know, you must just talk to them more. You know, you kind of like, you can also build a relationship with the brokerages. It's not that you're only just a client on there, but you know, if you're a loyal customer and you're pushing in some decent lot sizes, and yeah, you can definitely build a better relationship with your brokerage. Dun, 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 dun. What is Gbpjpy USD doing? Do you think by the end of the week we'll close 3,500-ish? That's actually a good... Let's look at the weekly candle. Because, you know, if FOMC is already coming out, I believe it should be... I'm just going to take a random guess and say sometime maybe Wednesday. Let's see, when's the FOMC? When's that FOMC? Is it after next week? Oh. Where is it? Oh, here. Oh, right. Damn it. I forgot. 17th. Yeah, forgot that. It's on the 17th. It's on the 17th. This is like, okay, so we got how many? We got this weekly candle and then 2 weekly candles. All right, so let's gauge it. Because, you know, like the market is also thinking in terms of spacing like this. Like whenever it's gearing up for such important events, for the market, a week is not really that long. Like 2 weeks is not that long. So what is the question here? Do you think the end of this week will close at 3,500-ish? Yeah, I think so. Like 35, we've already tapped 3,500. But whether we're going to get the next week to continue closing above this area such as this... Man, I don't think so. I think the risk would have to be taken off because, you know, it's still it's still like a higher probability. Yes, we get the rate cuts, but I would imagine they would still take the risk off. We gotta wait. We gotta wait, I think. You know, because like even if price still, let's say, closes above here, like it doesn't really make much of a difference for your trading, correct? Like even if it closes above here, or even if it closes below this area, it doesn't really make a difference for my trading, because, you know, like whenever I'm coming onto the market, pre-London or London or whatever time have you, I need to focus on that time. On that time to catch my trade during that specific time. So it doesn't really affect our trading where the higher time frames close. But it's always good to like keep that in mind. So for example, if you're looking for a sell and you can already see prices at all-time highs and you get your sell entry confirmations, that gives you additional confluence for why price should move like more aggressively in your favor. Because, you know, for example, price might be overbought. You know, then that's the only time that I really keep in mind these levels. Or let's say I get a buy. If I get a buy entry confirmation during the pre-London session time and we're at a psychological mark, then I could look at that as a potential magnet that price can retest. So that's how I usually like looking at the higher time frames in terms of an intraday trader. But, you know, because the reason we don't care about it much is because, you know, volume can either come in at the Asia or it can come in at the New York session. But that will be outside of your trading times anyway, so it wouldn't really affect you. Because you can't catch every move in the market. You know, you have to be okay with focusing on just the times that you trade. Like whether this is here or here. Because a lot of the time what happens is, as new traders, when we don't give ourselves like a timeline to be trading, you're always feeling like you're missing out on the market. So now trading becomes a 24/7 job. And just because the market's open 24/7 doesn't mean you should always be involved. You know, so like there's a lot of times I would be trading the Asia, London, and up towards the market close. I would be trading all the way up until towards market close. Because there's always like a need for taking position, and you always feel like you're missing something, you know. You always feel like you're missing. So, you know, you're going to be out in a meeting somewhere. You're going to be doing other things with maybe your friends or your colleagues, whatever have you. And you're going to feel like you're missing. You know, you're always on your phone. You're always on your phone, and then you just become that guy who's always kind of like anxious about trades. You know, alert goes off on your trading view and you're like, damn, this trade looks good. And you're at the gym. You're in the middle of a set and you stop gymming because a trade looks good. Man, that's like you become a slave to the market at that point, you know. And then what usually happens to most people, they can do that for maybe like 6 months, a year, but you're going to burn out. In the long term, you're going to burn out and you're going to see that's just not sustainable. And it leads to a lot of anxiety as well, which is not good. As a whole, it is not good to be anxious, especially in the market. So that's why I would say, you know, who gives two shits what happens? I have no idea what happened in the market. Remember, yesterday we streamed. I got off stream. I took my trade and I have no recollection about what happened since the New York session. So every time we come onto markets, I'm just seeing it new like everybody else here. You know, we're doing like fresh analysis, catching up on previous days, New York session. How did price move in Asia session? Even because of the pre-London sessions. Pre-London sessions are mainly due to volume. I don't do higher time frame analysis for pre-London session either. But I just do, I keep like a quick glance at these key levels, like to see, okay, you know, what did we quickly do? Like, is a daily up right now 0.40? Is it up 0.50? Like, what have we been doing? And then that's it. But there's no need to always do higher time frame from daily, 4 hour, 1 hour, all the way down. At least for my trading style, there's really no need for that. Because, you know, we're just kind of like focusing on what's happening here with the overall higher time frame perspective. So we're keeping that in the back of our head, like right here, but then also focusing on what can you catch right here, and if that makes sense together. And I guess like most of the time, the more they're in line, the better it is. So that means if you're taking a buy and price is already moving up, you know, like awesome. But you can quickly see if price is already moving up or down based off the daily percentage. You don't even have to see the candlesticks. So if I come on during pre-London session, like I usually do, I go straight on the 1 minute time frame. And then I say, okay, so what is that daily candle doing? You know, then I just look up here and say, okay, you know, 0.10%, we didn't do anything. We're not doing much. But if I look at it and we're saying, let's say 0.50%, then I'm gonna be interested. Then I'm gonna go on the kill zones and see what the session did and what kind of continuation we can get. You know, simple. And the reason is because I trade like this is because much like everybody else, I also learned higher to lower time frame analysis. And you know, when I was learning that, what was happening was creating a lot of like analysis paralysis. So I had to find my own methods of navigating the markets. And everything I'm teaching you here is my own methods. You know, like nobody taught me any of this. So I had to figure out a way to make it as stress-free for myself as possible. In a way that makes sense. Because some of you guys, you're learning from mentors who are teaching you certain things like this, like where you're having so many lines like this. For example, that's quite a common one, but you're never going to be able to replicate this, you know? Like where they draw for you like certain lines like this. It can be quite difficult. You know, that's going to come to become very subjective, much like if anybody teaches you, for example, about a trend line. That can also be quite subjective because what trend line are you going to use? Are you going to use this trend line? What about the other trend lines on the lower time frames? There's always some kind of a trend line that you can draw. Unless you're using ICT. I have no idea about ICT and all the other methods nowadays. But when you're learning about support and resistance, that's typically what I would say the basic type of education that you're going to get. I would say support and resistance levels, it's usually something like this. Or when you start to learn about trending environments, it's usually something to do with the trend lines. All the other stuff, no idea. But you see, that's a foundation though you want to get correct first before learning the strategies. Is understanding trends, how price moves, and key levels of support and resistance. You just explained my first 2 months of trading, then stopped and started planning certain times of days. My winning rate went up and the stress levels down. Amazing, Ryan Williams. That's exactly what you want to do. Stress-free trading. That is the goal at the end of the day. Otherwise, you're going to look like the first guy I ever learned trading from. You're going to have my favorite guy over here. You're going to have his eye bags. And this guy went heavy on institutional trading, smart money concepts, and that's what it does to you. You know, you got to do a lot of due diligence. And also, I guess because you're taking a lot of risk. And when you take it, damn, this guy really does have dark eyes over there. Yeah, you got to take a lot of risk. And look at this. Crazy, huh? What is that? Can that really be from no sleep? I always imagine that's what it is, because I've seen institutional traders come and go. You know, in my years of trading, I've seen these heavy guys on institutional trading. They usually come and go because it's too much. It's very difficult to do that at the same time to teach people about it and try and make people understand it. It can be very tiresome. And I think, don't quote me on this, but I think that's what happened to one of these other traders over here. Wait. I think that's what happened to Lorenzo. Don't quote me on this. I'm just saying I've seen this happen to a lot of traders. And Lorenzo, I love this guy's streams, but you know, I think what happened is the same thing that I always anticipate to happen to people who focusing too much on, you know, these kind of correlations. You're looking at a lot of correlations. You're looking at a lot of like book maps, volume delta, a lot of speculating about what smart money is doing. But to each their own. I would say at the end of the day, to each their own, but awesome stream, awesome value. Yeah. But you know, at some point in your trading journey, you got to make a decision. What road do you want to go down? You know, it's going to be a very important decision that you're going to make. It's gonna be a very important decision that you gotta make. Because, you know, like the thing is, once you invest into a journey, you're gonna stick to that journey. You know, some people stick on that journey for maybe even like 5 years. 5 years. And you want to be doing something that you truly enjoy doing if you're gonna be doing it for the next 5 years. So if due diligence is not your thing, you know, then you're not going to be able to do that. If you're still asking like dumb questions on stream, like if I put something like this and then you ask me if it's a buy or sell, then you don't have the capacity to even do that, because you need to be very detail oriented. You know, if you don't even understand a simple thing like this, then it means you're going to miss out on a lot of things. You know, not to be mean, but it's just the truth. This seems to be a nice dip. Yeah, this is a very nice dip. This is a very nice dip because it's already taken out the Asia lows. Oh, he said on Insta story he's back live trading this month. Oh, nice. Yeah, that's where I get my dosage in terms of understanding, you know, just like a few angles. Not that I ever use them, because for me, all I gotta focus on here is the FOMC. That's where money is mainly been, order flows are mainly been driven for here. Key events like the FOMC. Maybe sometimes also core PCE data that came out last week. That also drove really good order flow here. That Monday open, market open was really nice. Volume came in following the core PCE data. But you see that all relates back to FOMC anyway. But when it comes to these other things like what was that thing last time, like Ricardo, you're talking about the gold at the all-time lows? There's a bunch of shit. Let me just say there's a bunch of shit you can use when it comes to smart money concepts. There's a whole lot of stuff that you can use. There's heat maps, there's a bunch of stuff. And you're kind of like predicting the market more at that point. You're kind of like really speculating. Silver spot prices rise 0.1% to $40 a troy ounce, maintaining a 40-year high. You know, most of this you're gonna see on TradingView as well. It's all focused on the reasons why gold is behaving the way it's behaving. That's one thing I really love about TradingView. They really do their fundamental work quite nicely. Gold hit another peak at 3,500 in Asia, reflecting dollar weakness, plus strong central bank and institutional demand as investors pivot away from US Treasury. See, trade tensions and geopolitical risk has sped up foreign central banks shift into gold. Central bank gold allocations even surpass their US Treasury holdings this year. Another tailwind comes from the Indian pension funds, which are seeking approval to invest in gold ETFs, hinting at strong demand for the metal despite record prices. Yeah, gold is gonna skyrocket. You know, we're at 3,500 now, but next year we're gonna be talking about, or by the end of the year, we could even see as high as 4,000. Because if we're getting 2 rate cuts in, I would not be surprised to see some more bullish exuberance, something like this. Like for us to just start gearing towards the upside. Like look at the way these previous daily candlesticks were moving when we're in this bull run. You know, that's just about 3 days. 3 days worth of data. See how far we can reach. That would just be under 3,800. This thing's about to skyrocket. It's going to distribute from this zone. Classic consolidation breakout this is. You see, that's why even if you think about the mentality of a consolidation breakout, it's not like the other time frames where we need like some kind of structure on the left hand side. because this, you know, it doesn't really need structure. Even on the higher time frames, you'll tend to see things like this happening. When prices are all-time highs, it will consolidate to keep moving up, accumulate orders, and then distribute. Wow, this is actually correcting. Let's see how much of this range here. This is about almost 65% of the range has been filled. I think trading, like any other stuff in life, when you start, you have this hunger and rage to get rich. And when this happens to you, you start shifting to other stuff to reduce other stuff and reduce trading with less stress. Oh, yeah, that's true. I like that you said have this hunger and rage. Yeah, it's like a burning motivation that you have when you first start something like this. It's the same case for a lot of things in life. But, you know, consistency is much more important than any sort of like short-term bursts of motivation. Because motivation runs out, consistency, discipline, it's always there. It becomes basically intrinsic. You know, it's like you have to do it. You got to show up and you know why you're doing it. And you're going to do it even in your worst days. That's why I think like motivation is only good to get you started, but it's not good to keep you going. So, you know, at some point you got to put away like all the toys and all the fantasies and really focus on the craft. Because once you start focusing on this in line with what you want to achieve, you're setting yourself on the correct path to achieving those goals. But you can't be always living in the future. You know, you just got to live in the present for now and just take it step by step, 1 foot at a time. And you'll get there. You know, it's like an analogy I like to use is if you're driving on a road trip in the middle of the night and your headlights are only showing you a few meters ahead, you know, like you know where you're going, you know where your destination is. You can't see anything but just a few meters ahead of you. So that's what the journey is. You know where you're heading. And you just gotta trust the process that every meter or so, it's just gonna keep opening up for you. Like, how do we deal with losses? Taking a break for a week, maybe? Yeah, I think, you know, the thing with a loss, if you really dissect what a loss is, it's almost more of an emotional response. You know, losing and your reaction towards the losing. That's why a lot of people think like they need a kind of break. They need some kind of a break, you know, a 1 week break, 2 months break. It's just really just an emotional response to the loss because nobody likes to lose, right? But you just have to make yourself kind of numb to it and just keep moving on. You can't think about things too much because that takes away your energy from where the energy needs to be put. You know, so the quicker you are letting things go, the much more I think efficient you are naturally. You know, think about this. If you get an argument with your spouse, it doesn't help you to think about the argument because that's just going to make you even more angry, you know, and that's going to mess up your whole day. So you already got to get into a habit of tricking your own psychology because your psychology also is kind of almost against you, you know, based off what normal people react to things. Normal people hold grudges. Normal people think about bad things a lot more easily than they think about good things. So you just have to be okay with letting go. So if you take a loss, just forget about it. Just keep moving forward. Control what you can control, like which is getting better. And that's it. Because every loss, you know, sometimes you're going to get really good lessons from them. Like, so you just have to see what is the lesson I'm trying to learn here. Try and get that lesson when it's still fresh in your head. Don't take a break. Learn that lesson now. And then that's how you just keep moving forward. Just keep moving forward. So it's just it's a mindset shift more than anything else. Losing in the markets. What was the website you just saw for FOMC? It's called CME Group. CMEgroup.com. Or you can just type in, I guess, Fed Watch on Google. Then it will probably pop up. It also says there's a mind shift. You know, there are two types of people. There's ones who, when they take a loss, they play victim, and ones when they take a loss, they see the opportunity in it. And only one of those two get rich. I like that. That's only one of those two people get rich. So you either play the victim or you see where the opportunity is. In losses or in anything, challenges, what have you. Looks like GJ is getting ready for a retracement as well. If it breaks above, that's 199, 300. Also got about like a 30 pip range there. Because the only way you will master this is by consistency. If you're not, you won't achieve nothing. Yeah, well said. Then a small little break and retest of this zone here, because this is a previous so remember we spoke about how the market is going to be looking to take out this previous position. So that was where the distribution was coming from. So you got resistance and you got support. That was the distribution. That's why I said the market will move down forever. It's going to be looking to come and take these players out, because this small retracement, that was not enough to take these orders out over here. They would have survived this. But you see how the market does that? Comes back, mitigates that area, and then continues to move in that direction. So, you know, if you've been paying attention here, you're going to see exactly what we keep talking about. So, yeah, I think this is pretty good. This is what you want from your system. You just want to be able to anticipate certain things like that from your system. Because if you don't have a system already, you wouldn't be able to see the patterns and consistency. And that's, you know, that's why a lot of people are always wondering like, oh man, how can I become consistent? It's also about understanding the strategy that you're using and the patterns of what happens over and over again. So this is one thing that, you know, we speak about quite a lot. That's why we're already expecting price to come and retest these areas. And it's really nice to see that, because it means there's a really high probability that a lot of people were getting into these sells. And then you look at that and you ask yourself, like, how could you have caught this move? You know, if you see a distribution like this, how could you have caught this move? Then you keep asking yourself that, and you keep paper trading it. Eventually you start executing on it, and over the months you get really good at spotting those for yourself, and also understanding like which are the really good ones, which are the not so good ones. Yeah, but you see that? I wouldn't be surprised to see it come all the way back down here now and retake these lows to testing these highs. Because sometimes people have like really long targets they set for themselves. Like even something like this could miss it by a few pips. It retests and then it comes to take it out. Lee, thank you for the sub, man. Eurozone CPI, 5 a.m. Eastern. Oh, we got core CPI here in about 3 minutes on the euro. Well, good thing we're not trading any euro pairs. Yasin, thank you. Shout out to Vic. All right, so let's see. What do we do? What do we do? For me, it still feels like price on gold still has this kind of agenda to the downside because the daily is flipping right now. It's down 0.0. What's that down? 0.01%. 0.01%. What can we do? Can't do anything. Can't do nothing. Because it needs to come down. Basically, like, this is not enough structure. So price has come down. It's, you know, it's retraced. It's corrected some of this move over here on the left-hand side. But it's still a bit too soon because the move downwards was quite fresh. That's why I always trade the way I trade. Pre-London, one trade, give it time. It's always good to give the market time. Give the market time to create new structure. And then it's like easier to read. So this is also too soon for me. I'd have to wait for another hour. Another hour before I start executing again. See how that hourly candlestick looks. Creating like a doji. Like a bit of low volume. Also, reason being is if you can consider the higher time frames, you know, when a higher time frame moves, also the higher time frames can consolidate. So you see how this hourly candlestick, look at the way it's closing here in the next 20 seconds, like a doji. Because it just had a big move like this. And it's coming towards like a support area, which is also a pretty key support area. If it breaks below that support, then there's some range to move down. But, you know, for this, I still think it's also quite risky because you're trading against the overall trend, which is that bullish momentum. So we just tap below support. New hourly is opened. Awesome. So this hourly should start, when it closes, this hourly should start again printing more candles and then giving some more direction. It's, you see, that's the reason why some people, you can be so good at doing backtesting is because you're more patient. You know, with backtesting, you can just skip forward like this. So you're a little bit more patient to at least wait for some kind of structure that looks good. Just when you're forward testing, you just have to wait. You just gotta sit on your hands. This is, you know, that's actually the hardest part about trading is being patient. Taking a trade is quite easy. Because once you see the setup, it should be like second nature. You know, it's like tying a shoelace. When you see it, you execute. Simple. The hardest part is waiting for it. And then controlling your emotions in between those times. That's where most people actually go wrong. If you ask me what's the reason a lot of people fail in trading, is I would say a good percentage of that is due to the fact of waiting, and that gap in between waiting, there's also the challenge of emotions. And that's where I would say majority of people fall short. Especially once you start finding profitability, man, that's gonna increase even more. Because there's times when you start to find your profitability, what's gonna happen, you're gonna want to always milk the market, you know, because you have this system. This system looks good and it keeps working. So you're gonna want to even take more trades. You know, so the patience thing really runs out. Because imagine this, right? Imagine you've been struggling for such a long time to even just find a strategy which works, and then you finally find one which is good and you can easily understand and execute on, and you can see the potential of it playing out. So you're going to end up taking a bunch more trades, which are going to be unnecessary trades, you know. But like once you get to that point, it can be very addictive to always execute. Because I remember, like, once I got to that point myself, once I started ironing out my strategy and starting to really see like what I needed to be focusing on, it becomes addictive to always take a trade, you know, especially if you get during a month where price action is pretty nice to trade. Because remember, we've seen on stream these times when we're getting back to back to back setups. So it becomes very addictive to get those days. But the problem with that, it's always in the long term. It's never in the short term. The short term can work great for you, but it's always in the long term. That's where the issue is. That's why experience is so important. You know, because I've already tried this. I've tried this in the short term and it works really great in the short term. The problem is always later on. You know, when you start doing those back-to-back trades, a lot of the time they're going to be like these losing trades. And the losing emotion compounds a lot faster and stronger than the winning emotion. You know, so if you start taking like 3 back-to-back losses, you can easily spiral and tilt. So everything that I do here, guys, when I tell you like 3 trades a day and 2 trades a day, I'm doing this from experience because at least that's what I struggle with. And I imagine a lot of people struggle with it, would struggle with this as well. I have to be real. My downfall comes from a winning streak. Bro, there are times when I'm on winning streaks that my ego starts to get to me a bit. You know, and I always have to be careful. Like you see, like even, when was my last longest streak? My last longest streak was 6 streaks, but that was not big enough for the ego to come in. This is a pretty, damn, this would have been a really nice one here. That would have been like 15. I just took 1 loss. That would have been like 15. But there are times you feel untouchable. And you know, it can become very, very risky. So I always try and remain humble. So even if you look at my stats, even when I'm on a win streak, I try and remain humble with my winnings. I try and just keep it to be the same as always. Like basically not changing anything. You just don't change anything until the next losses come around. Just keep it the same. Just keep it the same, keep it the same. Need patience. There will still be thousands of trades in your career. Yeah, 100%. You're not going anywhere. I imagine majority of the chat, or like I would like to imagine majority of the chat is not going anywhere for the next 5 to 10 years. At least everybody's still going to be somewhat trading, and if you have that perspective, it becomes much easier to manage emotions. We're not going anywhere. It seems like nothing interesting there. Yeah, this is what I mean. This is why you gotta wait for HDF to set up again. Because the moves have already happened. They've already come down. The next round of moves are gonna happen most likely in the next hourly candlestick. That 6 a.m. candle. Because this was a London move. So you see, like since London opened, it was to be a sell. So these were the London moves. Now in the next hour, we're gonna be heading into pre-New York. See, like just the same way this was the Asia move. Asia move was bullish, and then pre-London was mixed bias. Lovely 28 pip range above here. 34.81. But every trader has their vices. I think like what you're gonna see with a lot of traders, what I've seen is some profitable traders have a bad habit of taking really big drawdowns. And for me, every trader has their kind of like vices. I think for me it's the occasional, like maybe occasional gambles. I think it is. But I'm never gonna take a big drawdown. That's one thing that I never do. I can never allow myself to take a big drawdown. Occasional gambles, they come from time to time. But I think that big drawdown thing, it's like it's what destroys a lot of these great traders. Like some people, they can't just help but to take massive drawdowns. You know, there's a lot of these traders that you can look up to, like Tory Trades, Q Banks. I think I'm just naming the ones come to my top of my head. These are like household names. Lambo Raul. Like these guys take really big Mamba FX. These guys are more prone to taking really big drawdowns. Who else? Yeah, these are just the ones that come up on my top of my head. So you gotta see what your vice is as a trader, because you need to be careful with the bad habits that you have. You know, some of them can be career-ending bad habits, and some of them is just like, you know, whatever. Oh, some people got a vice of news trading. Yeah, losing a lot of news. That's another thing. Man, you gotta watch out for this one. This is the one most people have. This is the one most people have, is the news trading. Because you're gonna have a consistent week, and then comes along Friday, and comes along NFP or something like that. Then you end up giving back your gains because you're gambling on the news. Yeah, man. This one, it took me a while to get rid of this one. I gotta admit, this was a very difficult one for me. It took me a lot of trial and error to finally stop doing this one. You know, that's the thing about bad habits, is that even if you know it's a bad habit, you gotta like keep doing it just enough time so you can get sick of it. This is like a cancer right here. Because man, I would have some really amazing weeks just turn into negative or break even or even less profit because of news. It's a really bad one. Because it's really bad because there's always an opportunity for news. You know, the ones with the drawdown, the traders with the drawdown vice, this doesn't happen as frequently. This could happen maybe once in a while, maybe once, even 1 or 2 times a year. You know, 1 or 2 times a year for most professional traders. But if that's a vice, it could happen to them, you know. But the news thing can happen like any week, the news thing. Trades a marathon or sprint? Yes, sir. What else is it? Leave it in the chat. What's your vice? Like, you know, what's that one thing that you do? I think it covered like pretty much it, but what's that one thing that you do that's holding you back? You gotta look at that thing, because that thing is gonna reappear again. Eventually it will reappear. It needs to be something that's not so bad. That's something that you can come back from. Something that you can come back from. Overtrading. Overtrading is a big one. Taking like revenge trades. Scaling in. That's a big one. Well, most of these things, yeah, as you can see, it always goes back to psychology. It's only you who can stop it. Like sometimes I get the question, how do I stop overtrading? You know, how do I stop overtrading? Like you see that question, it also doesn't make any sense. How do I stop overtrading? Just stop overtrading. Just don't do it. Don't take that additional trade. What an overtrade, you gotta classify what an overtrade is to you. Overtrades, maybe 3 trades, 4 trades. So just stop when it's an overtrade. You know, like some people are comfortable taking a lot of trades. I think anything above like 3 trades is typically, you know, like an overtrade, especially if you don't manage your risk. They asked me like, how do you stop overtrading? Just stop. How do you stop gambling on news? Just don't trade the news. Stop watching people who trade the news. Because what you're doing is you're watching people who trade the news. You're watching people make money on NFP. So you also want to replicate it. Always wanting to be in the trade or always thinking the price can go higher. Oh yeah, that's true. That's true. Like that feeling of always thinking that price can go higher. It's a thing that makes winning trades become losing trades. So you really want to cherry pick those moments. And usually the trick that I use when I pick those types of trades is like if the structure just looks really freaking awesome. Like for example, right here, let's say if I was looking for a sell, if my entry was a sell, this is such a nice range at the all-time highs. So we have some kind of unique variables here as to why price can move down. Yes, it's still a risky trade, but if this plays out, it has a very nice chance of running towards the downside. In hindsight, that's what I think that idea would have been, to catch the straight thinking it can keep going lower. Correct? But you always want to cherry pick those moments. That's why most of my trades are always going to end off at 2%. When I'm holding, it's going to end off at 2%. It typically doesn't really go above too much about 2%. Maybe sometimes I get positive slippage and I make a little bit more than 2%, but it's usually just around that much. So I would say that's one thing. Is set yourself like a TP target and don't deviate from that TP target until maybe you get like a really good attempt, and then you can try and hold like a running trade. A really good situation in the market to do so. But yeah, price is just ranging heavy here. Look at the 15-minute. Massive wicks, rejection wicks to the downside. 30 minutes consolidating, chopping up, moving sideways. Getting ready for the next bomber clock.
Bomber clock!
The hope thing. Oh, that's good. Yeah, no following my rules seems easy, but it's easy to break. The not following rules thing. What I think it is coming from a perspective of having a bit of experience in the market. What I can say is when you're in the market for long and you've already found consistency, right? You found some kind of profitability and consistency. You're going to be more capable of bending rules a little bit more, but you never want to do it in the beginning, correct? Like we all want to kind of bend the rules in the beginning, but it's not a good idea to bend the rules in the beginning because you just have to watch it happen. Like over the years, once you find your edge in the market and you keep doing what you need to be doing, over the years, what happens subconsciously, you start to see these other times when you can bend the rules slightly a bit. And then you can take advantage of those times. But as a new trader, man, you can never bend your rules. Never bend your rules. Never bend your rules until you feel that confidence once you get enough experience from the strategy. Like you must understand your strategy inside and out. Like nobody knows. Here's the thing. Nobody knows TFX concepts better than me. But the problem is like some of you learning from like, these kind of other concepts which are very, very popular. Like ICT and everything, but no one knows ICT concepts better than ICT, or no one knows smart something concepts better than whoever does those concepts. So you can never like replicate exactly what they're doing because they have like different kind of experience. That's why you can take a sell and ICT maybe ends up taking a different type of trade, or maybe he manages it differently from you because no one knows it better than he does. That's why it's important to really understand each strategy inside and out. And it helps when you have some kind of like a structure, a structure of confluences. And somebody sent me the other day such a nice image of what TFX concepts to him looks like. And I can already say that if I analyze something, they really understand already what I'm talking about. Let me see if I can just find the picture. Yeah, so we got a picture over here. And what to me this shows me, it shows me that they understand, or they're on the same kind of wavelength. So whenever I'm explaining something, they're going to have a much easier time understanding that. But if you don't have notes like this, you know, and if you're not really digging into the information, or if it's too vague, you know, some concepts are just too vague to like really put it in a box where you can understand it properly. You know, so you have to make sure that whatever it is that you're aiming to learn how to trade a system, that it's not too vague. Because most of what we cover here, it's back to back, literally back to back. When we do the simulations, when we take these trades, it's usually back to back. Like what happened yesterday is we ended up taking another buy position, and this was still the same buy. It's still the same concept. It's literally the same trade that I took. The only difference with this trade was the time that it was being executed. But the concept was the same. Confirmations were like the same thing we always talk about. And that's it. That's how you're going to find consistency, and then just replicate that. Simple. And it's what I'm going to do again. Like when New York session comes, I'm just going to wait for my opportunity, and then I'm going to take that trade again. You see, because the concept is not vague. Because with TFX concepts, there's only a buy here. As price pushes above this area, there's only a buy here. There's no sell. You know, some strategies, they have like the buys and sells. So you could take like maybe a buy here, but there's also another sell entry here. Right? So that's why I'm saying you could take a buy here, and maybe even ICT takes a sell here, and then his trade becomes a winning trade. And then your trade becomes a losing trade. Then you're like, man, I should have taken that sell. Why did I take that buy? You were still following your rules. But maybe you just couldn't see it exactly like how the other guy's seeing it because it's too vague. And then that's it. You know, that's the idea. Price moves up, fills up the range. Same reactions we always expect. At this point, you know, price can still move up, but it becomes a bit like 50-50. You know, it's still like 50-50. It's still valid as long as it doesn't take out those lows. But it still becomes 50-50. London already swept Asia low, so we in that AMD phase now. I'm loving this accumulation that's setting up here though. You can really see that its market is taking a pause here, getting ready for the next big move. Oh yeah, GJ is down 0.12%. Goldie's still like a doji. Sweeping what? This sweep of the Asia lows. Nice little confluence. 15-minute rejections. Could be a really nice buy that's cooking up here. It's on the hourly. Take off the previous lows. Previous hourly doji. A bit of an indecision. Makes sense after a move downwards. And this hourly is probably going to do the same thing. That's what I anticipate. Next 38 minutes, probably going to stick within this range for a bit longer. Then the probabilities now increase when it comes to that next hourly candle for a potential move again. Could have been like small little liquidity grab here, especially if price still wants to move up today. Because you can see on yesterday's move on the hourly, it already did its grab below these hourly lows. It is liquidity grab and then price moved up. You see, it kind of does the same thing here today. Does this liquidity grab because it hasn't yet done one on the daily. Oh, actually, wait, it did one. It did a small one right here. But that doesn't look like a support. That just looks like a wick. It probably just did it on a lower time frame. So this would be the major one right here. Just as this one was for the push upwards. Because the price didn't come back to retest that area. All right, Goldie, maybe we can get a skyrocketing entry later on. See the fundamentals. Japan ruling LDPs. Japan Saito. We got a bunch of Japanese news that came in here. Was that like 334? Oh, that was much older. That's pretty old news. GJ is not moving really. It's already had its move. Man, GJ is really stuck over here by 200. Holy. I've never seen GJ struggle at a level like this in such a long time. So probably waiting for the Japanese yen to hike their rates. That's probably why. Because if they hike their rates, price is going to come down. And the yen right now currently is hiking rates. So it's like the pound wants to have a recovery, but there's this looming interest rate hike. Man, that's why it's so important to understand the fundamentals of the pair that you're locking in most of the time. Why it's moving like this. Because, you know, if gold was moving like this, we would know exactly why gold was moving like this. Just the same way we know exactly why gold has been moving up. You know, and that gives you pretty good insight. Because now this has nothing to do with technical analysis. You don't even need to have any lines necessarily on the chart. You have to visit your fundamentals. Whenever you see something and you don't understand it, always visit your fundamentals. And then that's what's going to help you understand why price is moving like this. So what I think for GJ is the yen interest rate hikes. We might be having those looming over. What's your view on how flips instantaneously touching ATH doesn't seem like it's willing to push higher? Oh yeah, I mean that's quite normal for gold to do. Like if you look at the way we were hitting all-time highs before, as we're breaking into these ranges, like gold has this habit of pulling back. On the daily it looks nice, but as you're breaking them, it has a habit of always pulling back. You know, it has a habit of pulling back. So that's just something you got to be cautious about. Ideally, if you're getting an all-time high trade, you want to be getting it within some kind of a range. You know, like for example, the Asia session players, they had this range over here on the left-hand side. So as Asia opened, they're in a much safer position to be executing trades within this space over here. It starts to get a bit dangerous at the top. So I would say it's just a variable. There's just a variable of a pullback happening. You see how aggressive the pullbacks can be? Like when we tap 3,500 and how this one candlestick just came coming down like this. It's just a variable to keep in mind. Basically, all right, let me just give you like in a practical way. Basically, if you're taking an all-time high buy, you want to see a quick reaction. The moment you start to see pullbacks, there's a pretty good chance that it's going to be like a strong pullback. Because there's two things which happen usually. Either breaks the highs and then price moves with volume, or it breaks the highs, it stagnates and starts to come down. That's not what you want to see. Because now you're already thinking about like, now what's the second variable that can happen at an all-time high break? I still want to catch a bomber cloud trade though. I'm not gonna lie to you guys. Just wondering when this volume is gonna spill over into these pre-NY times. Because I would typically like to see the pre-New York first have follow-throughs and then start executing on trades that I plan to hold for longer. What day is it? Today's Tuesday. Still quite early in the week. Bear flag on the 5-minute. Yeah, it's still quite early. I think if I hold one, it's probably gonna be based off of remember when we spoke about how to maximize profits in last weekend simulation? It might have to do with a setup like that. And if you haven't watched it, make sure you go and watch it. It's been uploaded in the database. London already swept Asia low, so we want becoming a cherry picker would train the brain to only see best moves to get into. That's exactly, Jay. Gonna take a bit of time here to set up. Well, those rejection wicks are looking good. Could we retest 3,500? Seems a bit of a stretch. But, you know, the daily's already been up there. But the hourly time frame looks good. Really nice clean range. 1, 2, 3 candlesticks in a row. Let's see that 4 hour. Oh, 4 hours still open. Okay. So this kind of makes sense, I suppose. Waiting for the new 4 hour open in about 29 minutes. This 4 hour close in line with that pre-New York hourly candlestick. Yeah, makes some good sense over here. I think for sell continuations on the day, we would still need to get through pretty key level by 34.69. So what's the probability that price continues to sell off on the higher time frame? It's much lower, anything above 34.69. Correct. What Asia move? This was Monday's Asia move to the upside, but definitely still bullish. Accumulation, breakout, retracement back into accumulation. See, man, that's why I love these accumulation zones. So look at how price accumulated here. Beautiful liquidity grab, confluence, distribute. Look how price accumulated again and then distribute. So now we're back in this accumulation area. There's a smaller accumulation here too, with a manipulation confluence, accumulation, manipulation, and then distribute. Man, most of the big moves happen in accumulation phases. You know, that's why I trade accumulation phases. Most of these big moves are coming out from accumulation phases. Look at that distribution over there. I think maybe this was one, maybe not so super clean, but also nice distribution with clean range on the left hand side. Could be cooking one up here on the 5 minute too. What trades do you try to hold for longer? Is the time frame different? Not necessarily. Not necessarily, because my biggest trades actually come out from the 1 minute time frame. These are where my biggest trades come from. But if you can couple this with, let's say, higher time frame, it's always a good thing to do. Because let's say, for example, you see like situation like this. So let's say you're taking a small little break, little accumulation break. Let's say, you know, your trade was based off the 1 minute time frame and you're waiting for a break. Beautiful little small accumulation over here. So basically, this is like similar idea. See how price moving sideways? Okay, perfect. This is when you're on the charts. This is when you're expecting some kind of volume to be coming in. And then you take the buy like this. So this is why I make these videos on my channel, to show you guys how I'm trading these other sessions as well. These other sessions. So you're just waiting. You're waiting to get your entry confirmation in line with that time, first of all, that you're expecting some kind of volume to be coming in. And then you say, okay, so this is my setup. This is my setup. Now, if I'm thinking about holding this trade, for example, right? So let's bring this down. Let's say if I'm not thinking about holding this trade, you got to investigate the other time frames. Like now, you know, the 15-minute time frame or the 5-minute time frame. You can start from the 5-minute and above. 5-minute above. So what you're gonna see is, okay, so you know, if price is gonna distribute from this zone, because this accumulation, right? Like all these orders need to go somewhere, right? They need to go somewhere. So if you're right about the direction of the trade, now you're gonna ask yourself, then what is the probability that price keeps moving that direction? So you're gonna look left hand side, and ideally you want to have some kind of a clean range on the left hand side. Right? You want to have as clean range as possible. You see, this trade in particular did not have a very, very clean range. So maybe you can go on like the 15-minute. You can go on the 15-minute. Then you say, okay, you know, I'm going to base this trade off of the 15-minute time frame. You know, off the 15-minute time frame, because the 15-minute has clean range and I want to hold a running trade. So if you can get a time frame with that clean range on, then, you know, that's kind of what you want. Even you can go on the 30-minute. 30-minute looks good. Even the hourly looks good. You can say, okay, you know, I'm just going to base this trade off the higher time frames at this point. Because now you're looking from, in terms of a 1 minute entry, you've got in your 1 minute entry. And now you're looking at the higher time frames, just to make sure that you can see where price can go on the left hand side. Because, you know, the thing about the market, it does not necessarily know the entry. It most of the time kind of understands the stop areas a bit more, but people can have different entries. You know, you could have an entry here. Someone could have had their entry even above here and still expect like a push, you know? So that's why sometimes even on stream or like in general, when price has already moved up, we're still looking for entries so price can continue moving up. You know, so you can imagine from perspective of somebody who's already down here, for them, they really want to take their profit at where you want to get your next entry. So you start to break barriers in terms of how you look at markets and how you look at runners. So for me, when I see like a trade like this that I've entered and I see there's more room for price to move up based off of additional entry confirmations, that's like really nice confidence to tell me that can be a good running trade. So it's again, breaking boundaries, breaking ceilings. There's a lot of ceilings that we can sometimes put on ourselves. You know, if price is moving up, we say it's like overbought, then we don't buy because it's too high. But then once you realize like price just keeps moving in that direction. Yeah, so technicals, man, I think when you do it with technicals like that, it does help you get rid of the fear of holding trades. As long as the technicals are clean. But you see, in a situation like this, I would not be too willing to hold a buy. Because you see, if we go 5 minute, looks very sketchy. 5-minute resistance. If you go on the 15-minute, also 15-minute doesn't look as good as it could. You just have to really consider, you'd have to really consider the resistance points. You got 2 resistances over here. If it was just 1 resistance, that would look a lot cleaner for me. So if you take a buy and it was just 1 resistance to worry about, that would technically speaking look a lot cleaner. What you can do if you really want to hold that runner is maybe start basing it off a 30-minute time frame. So you're just trying to make it make as much sense to you as possible. And if it's not clicking and if it's not making sense, then it's most probably not worth it. Because the runner trades should be very straightforward. Like, you shouldn't even think too much about them most of the time. Like, for example, you got a support over here and you got another support here. Perfect. Already looks pretty clean on the 5-minute time frame. So the less convincing that you have to do for yourself, I always say, is the best. You know, that's why sometimes you take these trades, which you got to really convince yourself about, usually are not the greatest trades. So yeah, I think this one, for example, that was beautiful. 30-minute look clean. 15 look good. 5-minute look good. Price corrected this move. You see here's a different situation, isn't it? Now I'm trying to actually convince myself a bit. I'm trying to convince myself. So you get, when you do analysis, you really have to audit your thinking. The more free flowing it is, the better the chance that's going to be a nice setup. That's why the market, man, like it doesn't like hesitation. You see like how price often breaks below these lows and then it just keeps moving down. Those are really good trades. Zero hesitation trades. Zero hesitation. See how it also broke below these lows right here and just continued to move down. Zero hesitation trades. So like setting yourself some rules that where you don't hesitate is the key thing. Just have a good set of rules that you can follow where it's not going to make you hesitate. Hesitation actually is the #1 thing that kills accounts. There's so many trades. I remember so many trades I used to hesitate on just so I could take the shitty trades later. It's the #1 thing, one of the most important things. Not the #1, but it's one of the most important things that lead to accounts being killed. A lot of hesitation. So you know, if you're hesitating here in the chat, don't worry. Don't worry, you're not alone. Everybody deal with that problem. Every single profitable trader has dealt with that problem you're facing right now for hesitation. And the only way to solve that problem is to trust your gut, you know, and your rules. Have rules you're following, and then when you know, you know. You know, that's the thing. When you see it, you see it. Those are the trades you should be taking. Like, focus on your gut feeling for those types of trades. Hey, Della Roma, thank you for the membership. That's what I'm gonna say is like the best way to deal with that. When you know, you know. Trust that gut feeling. If you're convincing yourself too much, then you know that's not a good trade. This thing is really cooking something up here, Goldie. It's getting ready for pre-NY open. This is all that little break that it takes. It's that little break before the next big move. I want to see it skyrocket, to be honest. It makes a lot more sense for it to skyrocket with those rejection wicks. Candle here does not have a top wick on the 30-minute. Let's see what the hourly does. Got nothing there on the hourly. Hourly is still bullish. 4 hour coming down heavy, taking out these lows. It's waiting. It's most like, I think like if you're gonna take a buy and expecting a really good buy out of this, you'd at least want to wait 17 minutes for the 4 hour to close. Because what's the probability that this 4 hour, for example, reflips in the next 17 minutes? You know, like, what's the probability that candle can close, pull up aggressively, and then the next candlestick to come up? Right now, with the way the 4 hour is set up, it looks like it wants to either close bearish, or even if you take a buy signal and then the next hourly candle opens, you know, that next hourly still needs to create its hourly lows and then move upwards bullish. So I think the best type of next running trades are gonna come in with the next hourly open. So that's also another way. Instead of just looking, also instead of the clean ranges, an additional thing is keeping in mind the higher time frame candlesticks, because it's always nicer if you're planning on holding a running trade that let's say if it's a buy, that the hourly is in your favor, like it's in the same direction that you want to go. But if it's like this, you got to deal with drawdown. I think that makes sense, right, guys? Because, you know, at the end of the day, you're going to read price action. At the end of the day, you got to learn how to read candlesticks. And you got to see, how do candlesticks behave? You know, if that makes sense to you, then, you know, awesome. 4 hour potential wick fill before moving up, aligning with London low manipulation before expanding higher. See, second trade. This is sell on gold, down for the day. Awesome. Second trade, done for the day, which was a sell idea. China's President Xi meets with Iran's president in Beijing. This is how we gotta be when we're waiting for candlesticks to set up. You gotta go and just, you know, walk around. You gotta do something. You gotta sit. You gotta sit and think about your next move, like this. You gotta sit and think about your next move. What's my next move gonna be? When will the market be ready for another entry? All right, let's see what else we got here. Buy AMC. What's the next move gonna be? I don't know what it's gonna be. I'm literally this guy right now. I don't know what I'm gonna do next. I'm on stream talking about buys. Maybe I might take a sell. You know, who knows? Every moment in the market is unique. Maybe price continues to move down. Maybe price moves down. Hey Vlad, thank you for the sub. I have a fear of having the SL. I always end up with massive drawdown. You have a fear of having the SL. Shouldn't the SL remove the fear of trades? Because you know when you're gonna be out of the trade. I always end up with massive drawdown. I have a fear of having. I think what you meant to say is I have a fear of removing the SL. I always end up with massive drawdown. Because you cannot accept a loss, sir. That's why. But trust me, whenever the SL hits, the trade is done. The trade idea most of the time is done. Like if your SL hits, there's a pretty good chance that trade is gonna go against you. You know, the whole idea with the SL is the winning trades are never gonna hit your SL. You know, so if you take like let's say a sell, because today we only had sells, What you see, you basically didn't even have drawdown here for these trades. You didn't have drawdown here. You didn't have drawdown here. So when you put an SL, put it at a level where you're sure that if price hits that level, that your whole trade idea now has been completed. You know, that's how you're thinking about the SL. Because trust me, all your good trades are not coming like this. They're not coming like this to hit your SL. They'll just keep going like in your direction. So it's very important. Don't remove this. Don't remove this. You know, it also doesn't make sense. Then you're going a bit counterintuitive over here, because now if you remove this, you kind of screw yourself over. You're going to take massive drawdown. Imagine if I removed my SL from the trades that I took. I would have had massive drawdown on these buys. I would be sitting in drawdown right now. I'll be sitting in drawdown and I wouldn't have the capacity to even think of taking a new trade. You know, because I still have to manage the old ones over here. The ones where I messed up on. So removing the SL is kind of like, having an SL is perfect because it's like you have a bandage and at least you can quickly remove the bandage. Right? You can remove the bandage and get it over with. That's the idea of the SL. So you can remove it and then like, get on to the next trade. Otherwise, you're going to have like an injury. You know, your arm, you're going to have one bandage here. You're going to have another bandage here because you're scaling in, another bandage here. And then in the end, when you got to remove them, you're going to remove all of them. Like, you know, like when you close all your positions on MetaTrader, you hold the position, then you go close all positions. Man, that's going to hurt. That's really going to hurt. You know, because now your account's probably getting blown. But yeah, guys, hope you enjoyed this little session here today. I'm gonna head off now. See you all tomorrow and take care.